Right, good morning everybody. Hope you're all doing okay. It's going to be a back testing session. We're going to replay back to sort of November 23. We're going to go a little bit hard. Well, we're going to go higher time frame. I'm going to do a different pair. I'm going to do GJ. Let's do GJ. See if that takes me back to 23. Yeah, so that's good. So we're at 23. November, is it November or October? November. So November 23. Yeah, and we're going to try and catch one, maybe two good trades. Pro trend. We're not going to trade too much counter trend. We're going to wait for the pro trend move, and yeah, we're going to try and catch it. So let's figure out where we are on the. Let's figure out where we are. So. Okay, we've just taken out this high right here. We've just taken out this high right here. First of all, let's zoom out. Let's just zoom out and see where we are. Okay, so we've just taken out this high. We're coming up towards these highs here. We ultimately have this. Let's just have a better look at this. I don't want to go to, I could go to the weekly, monthly, but I'll see the moves. So let's have a look in this. So sorry that it's all zoomed out, but we have a low, we have a high. We took internal. We took all this build up of liquidity, and we've been pushing bullish ever since. You know, we've had a strong low, weak high, taken this build up, taken this inducement. So we took this, and then we had a strong low, weak high. We took this, then came up and took this. So that's the second range, and it looks like we're pushing bullish to come and take out this high. So we know what range we're in, and we know where price is heading, or most likely to head, which is going to be this high right here. So this is our target, and we're not going to second guess this, because this is the range cycle, internal to external, and there's no reason to doubt why we're not going to come and take external, because we've just been pushing bullish ever since we took out this internal. So we're not going to second guess this. We're going to trade towards it with confidence, and all we're going to look for is bullish ranges to target these highs. Let's start zooming in on current price. So what do we have? We have a range that has just been completed. So we have a strong low, we have a weak high, we have a inducement of this internal range liquidity, leaving behind a build up of liquidity, a channel build up, giving price of reason to come and take it out. So you can see what happened is we built liquidity, we brought sellers in, we brought buyers in, then price brought sellers in, took out all the buyers by taking out this liquidity, and then on the way up we took out all the sellers that came in, that were in with their stops above these highs, on our way to come and take external. So if we've just taken external, we're well on our way to come and take this high here. So let's see if we can catch any buys. Now, where would I like to take buys from? Okay, well, first of all, I need to see my range confirmed. So hopefully we can get a range confirmed before we break this high up here. And then I will be looking at this low to then the new high that it creates. So let's just play price out and see what happens. Oh, fuck's sake. So we kind of had a break, but not quite enough, because we just literally took out this liquidity. Because we've taken out these highs, price will then come for the opposing liquidity, which was these equal lows right here, which got induced right there. So we could look for longs to target these highs, because I don't believe this is a full break yet, so I'm not going to trust this just yet, to be honest with you. I want to take the best trade, so I want to wait. Yeah, see, so we took the high again. So we've taken the high. This whole area becomes a smart money trap, because people will be thinking this is a break of structure. Then we've taken out the trap. So let's see if we can get another break to the downside. I've got this bloody little fly that keeps. Right, so it's not quite ready yet, to be honest. Not enough for me to take the best trade. So we've induced these lows. We're respecting highs. Kind of got to do it. So we're starting to create bearish ranges now. You know, we took out the external here, and we pulled back up. So this became weak, and we took that, and now we're dropping again. If we can get a pull back into here, maybe I'll take shorts. Okay, now we've got a full break of this. So we are looking at a really good range here. Let's have a look. So now we've had a full break. I mean, we're a little bit low in the move, so the shorts might be off the table, but we definitely know where we are in the range now. You know, we have a strong low, we have a weak high. You know, all of this becomes liquidity. All of these lows that were strong on the way up, they all become weak now, and they all become liquidity. So inside of this range, from this strong high, strong low, to this weak high, we have all of this. We even have this liquidity right here. We don't know whether price is just going to come and take out this low and then start pushing, or price is going to maybe give a false reaction here and then come and take out this and then start pushing. We don't know. So instead of trying to predict where price is going to go and just setting a limit order here, for example, and just going, right, this is my POI, I'm just going to take it direct from here. We're not going to try and predict where it's going to go from. We're going to try and react. So we're going to wait for confirmation. Because like I say, I want to try and take the best trade, pro trend, if I can. I mean, shorts from up here, if we pull back into here, then I will look for shorts if we don't take out this internal first. So but we'll see, because it's perfectly valid to do that, because oh shit, a break. So we've taken out this internal liquidity right here. We've taken out this internal liquidity right here. Let's see what price does. So the shorts are done, because we've hit our target of internal. You know, if we had pulled back up into here, for example, and then, you know, the shorts would have been valid until maybe this or this got taken. But for now, they're done, because we've taken internal. We've respected this low. So let's see. And like I say, I know my range. I know where I am in the range. I'm just going to trade with confidence up to this. So let's see what price gives us. Let's wait for some good confirmation. Okay, so we took the lows again, taking the lows again. This is obviously some sort of POI on the lower time frames. Now I don't know what. Let's go to the 1. You don't see much, but let's not go too low. Let's stay on the 4. We don't know what's in there, but there's obviously something. And we're taking these lows again. I'm not going to do what I normally do and just go, yeah, I'll take it here. Stops below here. Targeting the highs, because that is not what this is about. I mean, that is a valid trade because I am expecting this to hold. So this is a valid trade to just, as long as your stops are below this low, you could just go, yeah, I'll take it right there. We're close enough to this low, I can get a good stop and we'll target the highs. You can target this or you can target the higher time frame liquidity, but that's not what this is about. I'm going to wait for confirmation. Problem is for me, to get confirmation is I need to see this break. So let's see if we can get a break. Okay, so we have a break. We have a break of that. So now we're bullish. And this is my low that I'm expecting to hold. I don't expect this to break. Okay, hopefully let's see if we can get a pullback. This is the problem with waiting for confirmation. You don't always get the entry, whereas the direct entry, it comes with a bit more risk because you haven't had confirmation that you're going to go bullish, but you're in the trade, whereas this, I'm kind of hoping that we pull back before we go higher. So let's see if we can get a pullback. Okay, well let's look into this little range here, okay, because this looks like negation of this, but this also looks to me like liquidity, and in order for us to go higher, we need to induce lower. So I want to see a build up of liquidity, an inducement, and then we trade away from it. So I think if we get a sweep of this, we get a push into here, I will take this trade right there. Stops are going to be below this low right here, and we are going to target not just this, but we're going to target the higher time frame liquidity as well, because I think if we get all the way up here, there's no reason for us to come back. We might get pullbacks, but there's no reason for us to come all the way back here, because this is such a good entry because we're in right at the low. And if I'm wrong, then I'm just wrong on the whole bias. So let's move that over to there. Let's see if we can get triggered on this. Hopefully we can. Okay, so we've taken out the lows. See if we can get this mitigation. Come on, don't go without me. This is the annoying thing about higher time frames, I think. I mean, imagine having to sit through this. This is, I mean, I'm in now, but that would have been like what, 3 days worth of price action just to get into this trade. So I'm in this trade. Why did I mark up just this? Because this is what's called a hidden base. Like these, from this wick to this wick is hidden base, but I covered the whole area. But you can see where it reacted from, so let's see if we can get a nice push. Okay, we took out the liquidity, the little trap right here. It's respecting this strong low. Come on, come, that's beautiful. That's what we want to see. So we're looking good. Could we get another entry? So we mitigated this. Now we're pushing higher. Let's wait. Yeah, we missed the whole thing. We missed it because I didn't want to take a stop that big. I didn't want to take that right there with my stops there and target. It still would have been a good trade, but let's see, because we came to mitigate this. This is unmitigated down here, so let's just see what happens. If it comes back, I'll look for more longs, I think. See, if I was a bit more on the ball with these shorts above here would have been good. You know, we mitigated this. The shorts down to here would have been good. Come in, we've mitigated this, which mitigated this. Is it valid? That's the question, because these are equal lows. This is a lot of liquidity down here. Taking out these highs. We're pushing bearish right now. Let's see what happens in here. Rather than just predict, we're going to react to what happens. So let's see what happens inside of here, because this could get taken or it could just be mitigation. I'm not too sure yet, but because we do have all this liquidity. We are trying to trade bullish ranges, and this is a run of liquidity, break a structure. This could be break a structure, retrace, break a structure. This could be the low, and then we come and take this maybe. So let's see. She's gone. Okay, so we took the low again. We're respecting this low. We respected this low, and now we're pushing higher. Okay, this entry right here could be valid. So strong low, mitigation. I would have loved to have seen this get taken and then see this reaction, to be honest with you. I'm not going to 1 hour. I'm hesitating. this looks good. Let's see what next candle does. Okay, let's take this then. Let's take it. Let's take it here. Stops below here, because we're expecting this to just be mitigation and push back. We're going to be safe just in case it comes back into this block, and we're going to target, see if it's good risk to reward. So we're going to target this high up here. I'm going to target this, but I'm going to be aware that if this gets taken, I might still look for another long. So we'll take this right here. I don't know if I want to do it or not. Yeah, let's do it. Okay, looking good. So we were right to put our stops below this because we would have got pretty close. So we were right to do that, play it safe. Okay, good. Now we've taken out these highs. We've taken out these highs. We could expect a pullback, but but expecting these lows to hold. So we're getting the pullback. Okay, we've taken out this. You could look for longs in here, but I'm already in longs, so I'm not going to do that. You could do. Because this was just mitigation. This is a build-up of liquidity. You see what I mean about wait for the build-up. Wait for the build-up. Wait for the inducement mitigation. And then you look for an entry, not before, not without liquidity. Like this entry, that we had the build up, we had the inducement, and then I looked for the entry. You know, same with this one, that we had the build up of liquidity, we had the inducement, and then I looked for the entry. You know, and that will keep you out of a lot of losses. Stop trying to predict and wait for price to show you its hand. You know, show you where the liquidity is being built, and then you stand a better chance once price is taken it out. And not getting in too early, so not getting trapped into this on the lower time frame, thinking, okay, this is pushed up, this is a break of structure, this should hold, and then you start trying to take longs in here, and ultimately get taken out, because overall you're buying in the liquidity that's being built, and then we get an inducement, and then the move. So yeah, it's good. But let's see if we can get a push. Okay, so we came back into this POI right here. We're still in this position. Let's see. See, look, another build up of liquidity, and then we had the inducement, and then you get the push away. Look what price is doing. Look, it's building liquidity to the upside. That's why it looks a bit choppy, but it's not really. It's just inducing sellers into the market, and then look, it comes and takes them all out. And then hits our target nicely. So you can see there's a lot. You know, I like this price action when it's a bit choppy like this. I like it because it shows you more detail of what's actually happening. Whereas when price is just running like this, it's quite hard to not just to know, but to trust, like that this area here it's going to hold, and then we push up. It's quite hard to take that trade because you see all of this imbalance, you see all of this, and you see this is maybe liquidity and this is maybe liquidity. So it's quite hard to do that. But when it's a bit choppy like this, you know, you can see in a bit more detail, you know, how they build the liquidity, they induce the lows, so they induce lower to go higher. Because that's one thing you should keep in mind, is when price needs to induce, if price wants to go higher, first of all it needs to induce lower, so it needs to take out stop losses and then go higher. And you can see again, we built this liquidity right here, we induced lower and then we went higher, and then it wasn't quite enough, so what did we do? We came down, we induced lower to go higher. But what did it do in this choppy price action? It got people thinking, okay, you know, this smart money area or supply and demand area or support resistance area, whatever you want to call it, is valid, it's being respected, and we should continue lower. It's failing, so we should continue lower. But what happened is it just trapped a lot of buyers and generated a lot of liquidity above these highs. You know, trend line liquidity, like 1 touch, 2 touch, 3 touches. You got trend line traders getting in, and then what happens is it just goes and takes it out. So it's induced a lot of strategies into the market there. And that's why I like the low time, or when it's a bit choppy like this, because you can see it, you can see what's building up with the right understanding. So you can see, okay, so we've hit our target on this. So we got basically a 10R on that one, and then a 13 on that one. So we did 23R. I mean, I don't personally like trading like this. I mean, if you want, you know, if you it depends how you like to trade, doesn't it, really? I mean, me personally, I like to you know, be in trades a bit quicker, and I might take a few more losses, but I like to be in trades and know that I'm out by the end of the day. It just suits me better, to be honest with you. But you know, because if you were in these two trades, and these were your two trades, this would have been, you know, this is like a 90-day. This is a 90-day, you know, period for two trades, and although that's fine, you know, for 3 months. If 3 months and you've done, you know, 23R, that's brilliant. But it's whether it suits you or not. And also swaps on GJ, you'd get absolutely murdered, I think, unless I think longs on GJ might be positive swaps, so you might be okay there. But it is a hard pair to swing trade, especially if you're going short, I think. But that's it. I think two really nice trades. So we just to cover it, we identified the bias. Let's go to the monthly. We identified the bias through this bullish range. We understood where we were inside of the range. We understood where we were. We understood that we'd taken out internal. With the range cycle, you know, we know that once we take out internal, we have our target is external. So we identified where we were in the range, and all we were looking to do was trade bullish ranges up until we hit that point. So we were just looking for a build up of liquidity, a run of that liquidity, and then we were looking for an entry. And that's how we caught those two trades, but all by understanding the higher time frame bias. Yeah, hope that helps. And I don't think there's much more else to say on it. But yeah, two really nice trades and a nice little session, probably like 20 minutes. So I like doing the back testing. Problem is, on the lower time frames, you can only go back to like the 1 minute, you know, 5 minute, maybe a little bit more. But yeah, on the 1 minute, you can only go back like 30 days. So yeah, it's a bit frustrating. But yeah, I'll see you again next time. Thank you very much. Goodbye. Oh, wrong button. There it is.